Shikdeen, Shari, morning. Late one today, Saturday, July 13th, 2024. I think my swim was down for most of the morning. I start to try to log in and do the weekend review since 6:30. So every 15 minutes I checked in and finally it worked, but it was down for maintenance. So this is one of the later one. Normally, I don't bother even open the chat area to see if anybody's in the room to answer any impromptu questions. But since it is almost 8:30, I might as well open that up just in case. I doubt it. 99.99999% of the time, nobody is in here. So I don't expect that to change at all. But just in case, if someone popped in and asked the questions, then I'd be ready. Okay. VIX, flashing caution. Nothing new, nothing exciting there. Okay. Let's jump to Bitcoin real quick. Stabilizing. Not complaining. Nothing to be too excited about. But if it dropped down to 51.8, 52, I have ordered there to buy some BTC as well as IBIT equivalent. Okay, so for now. But as far as trimming IBIT, up there. Okay, if I see 64 and above, I'm be trimming the IBIT that I bought down here. Okay, that's simple. Ethereum, I bought. I did not buy any ETHE. I bought Ethereum itself at 2,800. So no complaint there. I do have some ETHE which I will trim, but no rush. Okay, no rush. I think it can run back up into the 4,000 area, so I'm gonna stay greedy with ETH. All right, TLT, decent week. Yesterday, quick commentary on yesterday. The CPI came down more in the market like that. The PPI didn't come down much. Why? Well, first of all, a big component of the CPI is not in the PPI. Rent. Okay, rent is anywhere from 35 to up to 40% of the CPI. Big component, huge, more than a third. Okay, more than a third, and that has been coming down. It was as high as, I think at the peak, year-over-year high on the CPI was like, I had to go back and look, but I believe it was 9% or higher. And it has been coming down. I've been talking about that for the past year and a half on the lagging shelter component of the CPI. And as of this week, the CPI, it come down to 5.2% year over year. And then the other part of the component of the CPI that also play a big part in the decline of the CPI is, of course, used car. Used car is down double digit year over year. If you strip out rent, shelter component of the CPI, would you believe that it is under 2% CPI? Yeah. The inflation rate right now is roughly 1.8% or so if you strip out shelter as a component. So it is below 2%. Now the PPI has nothing to do with shelter. Okay, producer price index is more, wholesales, bigger, picture as far as factory manufacturing, commodities, things like that. So it's not it has nothing to do with used car sales or shelters. So unfortunately, that's why. Plus, okay, as I just said, that commodities, oil, the rise in oil in the month of June certainly kept the PPI higher than we wanted. Okay, and if that come down, if oil come down, then it will help the PPI next month. Okay, there you go. There's my commentary on the PPI and the CPI. And then as far as a jobless claim, that's all phooey. Okay, it's all nonsense. It's all made up. It's all fake. It's I can't even comment on what the job data mean. The job data has been so messed up the past year. It's not even worth comment on. But TLT, I like what I'm seeing here, and I think the only question left with TLT is I'm in the camp that the Fed is going to cut rate in September and October and November and December. Okay, so I'm in that camp. I am not in the camp that think that the Fed is going to cut rate in August. Okay, no, it's not going to happen. Okay, they're going to make people suffer for another 2 months. Okay, so one, the CPI data. Okay, you can put this on the record book and say that if I'm wrong or not. Once the CPI data come out in September, and if the CPI continue to go down, right now it is at 3%. If it come down to say 2.7% in the CPI report that come out, basically that's August inflation rate that come out the first like September 11th, or so, then the Fed will have a presentation, and Mr. Powell will talk about easing rate in that presentation. So that's my prediction. And then CPI and then TLT will start to go up. Now, where can it go? Depend on how bad things are. Depend on the rest of the bad economic. Can TLT start to creep up higher? Yeah, I wouldn't be surprised if we want to start to see TLT creep up to 95 ish by the end of July. But it's also depend on how bad the data is. Okay, so we just have to go week by week by week. So for now we have higher low, higher high. Okay, so next move up, I think it's gonna be 95, and the TA is pointing higher. If you use these opportunities on this Japan dump, congratulations. Okay, it's if Japan threw away 30 to 50 billion in treasury, well, if you can do the math, they toss away a couple hundred million in gains. Congratulations. All right, let's move on to the major indices. DIA, all-time high. Goodness gracious. Goodness gracious. Okay, now that means I'm gonna short. Yeah, tough. Tough. I wouldn't discourage people from taking bad bets up here, but I rather short other indices. Okay, but yeah, it can melt up. Okay, it can melt up. SPY, I got my bear play in. Right. Um, it is losing money, but I have all the way to the mid October. I got a long time frame. So, but yes, I was looking to sell um, 561, 549, and it finally triggered. Okay, and for now, let it be. I got time. If anything, I learned is take a longer time frame. So for now, I got my bear play into the SPY. Okay, it is there. Um, where is this? Where can it go? Okay, where is this top of the line go? Since it's out of the channel, right? It's in. Okay, it's like I said, it's way it's beyond any kind of line you want to draw. Okay, it's let's go back 3 years. Yeah, it's a busy looking chart, and we can toss away. Let's clean it up. Let's since I'm talking, we don't care about that anymore. We don't care about this anymore. We don't care about this anymore. Yeah, it's just certainly don't care about this nonsense line. Get that out of the way. What else can we delete? Delete that one too. Would I delete this one? Yeah, I can delete this one too. All right, much better, much better. Um, yeah, there's not much, I can draw as far as how high we can go. I mean, you can do a fib extension. Let's do for the sake of this exercise, let's do a fifth extension. We're gonna go up into this. Okay, boom, there you go. There you go. So next fib up potentially could be 568-ish, 569, if that's the case. Okay, if this is the right fib extension draw. QQQ. I wanted to do the QQQ bear spread as well, but the bounce yesterday was not as strong as the bounce on the SPY. So I did have an order in for QQQ bear spread at 502, 484. Okay, it's a tighter spread, but that didn't trigger because it didn't bounce as much. But the QQQ, as you can see, I have my fib here. It stalled out at the extension there, and yeah. Would I try to put on the bear spread again at 502? Yeah, I would. I might change it though to say something like a 503, 480, something like that. We'll see. But yeah, I would try going out all the way to mid October. Now, the other indices that did real well, of course, is IWM. Finally, okay, and this has everything to do with, if you don't understand market dynamic, here's another uh, quick commentary. Small cap perform better in a falling rate environment because small business rely on loan a lot more than big business. Big business, sure, like banks. Okay, we can talk about banks later. Sure, can benefit from low interest as well, but it's essential for small business to have low interest rate environment because they rely on debt to survive. Okay, much more than big business. the JP Morgan, the Apple of the world don't really, you know, rely, that's a keyword, rely on low interest rate to thrive. But small business absolutely need that. And as rate fall down, this is why IWM, the small cap index, has been poorly performing all year until until TLT, until yield drop, and then boom. Okay, that's just the nature. Now I don't buy IWM. I talk about it, but because I have a lot of exposure in small cap already through a small biotech play, and I'm pretty overweight there. So I'm pretty much overexposed to small cap already with biotech. So I don't play the IWM, but finally you get the move, okay? And it could keep on going. You know, after 6 months plus of frustration, Tom believes he's starting to be right. Oh, he's a dunce. All right, let's move on. Max 7. NVIDIA. Um, what would I do with NVIDIA? Okay, so I did not buy any NVIDIA this week. I bought down here, of course. Okay, so I was buying NVIDIA 121, 118, 119. Yeah. Would I trim NVIDIA? I did trim. That's what I did do. 134. Okay, so I use this fib. I talk about it. I use this fib to trim. Did I buy it back? No. Would I buy it back in the 120 range? Absolutely. Okay, so for now, I didn't trim a lot. Okay, I trimmed, I think, 10% of what I bought down here. So yeah, just to be disciplined. Now, would I trim more up there? Okay, 144. So for now, I have an order in to trim. The only order I have in to trim is at 144. That's it. That is it. Okay, so that's my play on NVIDIA. Tesla, poof, smoking. It was smoking. If you have Tesla, and if you follow my channel weekly, you saw this, right? You saw this. Come on. I hope you draw it in for yourself. Okay, yeah, you save yourself $20 of profit, right? So not much to say there, but if you still have Tesla, hopefully you learn the lesson and put in an order to trim to 63 to 64-ish, right? You can always buy it back down here, right? At the gap fill. It will happen, okay? Tesla is very volatile, okay? It had it run. It had, keyword had. Apple, wow, okay, wow. If it comes down to the 20, yeah, what I would do though for myself is if there's a pullback into the 20, I would sell put spread down here, or even a naked put at say 205. Okay, um, but yeah, for me, I'm not chasing it here. I'm gonna put it on alert right here, just so that I know it's coming down. Okay, to a level that I should look below. Okay, this way I know it is come down to past high, ref high, that should be a support, or not. But yeah, that's Apple for you. Meta, I bought. My average price on what I bought Thursday and Friday is 501 ish. Okay, between 501 and 502. So I'm pretty pleased with that kind of entry point. Um, can it go down to 488? Yeah. For now, I'm content with what I have. my next buy order is all the way down to 488, and then 477, okay, and then 465. Okay, I'm just using the fib, and then ref low 455. Okay, so you can use the fib for entry point, but for me, the next buy is all the way down to 488. Okay, so no need to buy more. It can come down to 488 ish, and then I might take out all the order between 488 and then put the bigger one, like lump the order I have in between all the way down to the 61.8 fib here at 467. Okay, so I might do that, and it can, this area I believe is going to be a decent support, but I'm also aware that earning is going to come up, and let's not go crazy before earning, but this area of consolidation before takeoff could be a good defensive line. So the 61.8 fib extension is a decent spot to buy bigger. Okay, so I probably will look to double up. We'll see. Like I said, you gotta take day by day, level by level, and how the stock react. I might even put in a stop, okay, depending on how it behave, how the market overall behave. I might put in a stop on what I bought and take a small loss. I don't mind taking a $12 loss here and buy it back $12 lower, right? Why would I hold? If I think whatever reason the dynamic of the market is going to say nope, we don't take you lower, why take a loss up here and buy? I would rather take a loss. I hate doing a stop because the way Meta is so volatile, right? It can easily wick below the 50, easily wick below the 50 or the 100 and then bounce, and then I lose the share I bought. So I just had to play it by ear and just outright sell it. If I see the kind of movement I don't like a bleed down, but I would easily buy all those shares back at the 61 at the 61.8 fib here at the 467-ish area. I'm gladly save myself $20 of pain. Okay, it can happen. $20. $20 is a lot, a lot. Okay, 4%. Anyone would be stupid to hold on to that 4% pain. But you're welcome to do whatever you want. Microsoft, okay. I did buy a little bit, but I would buy a lot more down here, okay, at the 50, at this confluence of the basically the fib, the full fib extension retracement, and the 50, 432, 431 ish, yeah. I have trim, and I would consider setting a stop at 447. Okay, if it break, yeah, I mean it's just too much. Well, from 447 to 432, it's too much. Okay, too much. I would not give up $15. No way. So it's tough. It's tough to set up stop. Now I trim Google as well. Same thing here. Okay, it's tough to give up. Okay, I would rather get stop out at 183 and buy back at 176. And by stop on Google and Microsoft and Meta, I'm talking partial. Okay, I have a portion of my holding there that I believe long term, and then I have portion that I don't mind getting stop out. They are trading, and they're roughly 25% of my holding in those positions. So if I get stopped out, that's fine. I can always buy back later. Okay, just had to be disciplined. So Google, same thing. Okay, I don't mind getting stop out like 183 ish, and buy back 177-ish. All right, so that's that. And let's see, Netflix came down more, and yeah, it's here. Okay, it is at the 50. It sliced right through the 20 and get to the 50 in 2 days. Would I did sell put spread for all the, not all, but for Netflix I did. Okay, and the expired worthless, so I make some money there, make some lunch money on that. But would I nibble Netflix at 424 ish? Yeah, I would. Okay, so if it come down, I probably was trying to sell put spread down here, but earnings coming up. Okay, earning I believe is this coming week, so watch out for uh, big reaction on Netflix. I wouldn't be surprised if you're gonna see some kind of nasty dip, and if there is a nasty dip like this, it's a buy. Okay, so don't be surprised if we see a nasty dip on earning for Netflix. Uh, Last one of the Max 7, Amazon. Amazon is a no touch, no nothing. Would I buy Amazon down here? It had to be. It gotta come down to the 50 for me to consider. Okay. Now, would I sell put spread at 182, 175 ish? Yeah, down here. Okay. To me, it would be a no brainer to buy Amazon outright between the 100 and this ref low of 174. Okay. Now, in our dream, we get to buy at the, at this ref low that's gonna line up with the 200. Okay, it has not seen the 200 in a long time. This, it almost there. Okay, it almost touched the 200. That's how strong Amazon is. Okay, so that's really wishful thinking. What would cause Amazon to come down that much? I don't know. Okay, I don't know, but it's more reasonable to think that it can test the 100, and and that gap fill bounce right there. So yeah, to me, yeah, I would sell put spread 170 ish to 160 ish, easy peasy. Okay, let's talk other software related, big tech, old tech. Adobe came down, not enough. It need to come down to 540 ish for me to nibble. Okay, I would love to sell put spread down here, but yeah, I like Adobe. It's just not chasing. I held on to all the share that I had, the few 20% of my position that I let it run. I trim here, right? I trim. It ran. I did not trim more. I trimmed 80% of my holding, and then I let the rest hold on to it. And I would buy back down here. I would sell put spread down here, okay, in the 500. IBM, I got out. I am out. Okay, on this gap fill move, I said thank you, out for now. But yeah, no doubt I wish I bought more, but I take the gift and move on. Oracle, no touch. I like Oracle, but for now it's a no touch. Okay, it need to break. It need to break and come down. So until it break and come down, I'm gonna put an alert right here. Break down until I see that it is a no touch. Okay, until I get that alert, it's a no touch. Intel, um, nice move. Fill the gap. Okay, fill the gap and absorbing I have Intel. Um, and it's absorbing. It's absorbing regret holders, as I call it. Okay, so can you imagine all these people, okay, all year that saw this dump and held on. Okay, so yeah, they are selling. Okay, and it's absorbing. So that's okay. It can go sideways for a while until the 100 MA come down and meet it, and then it could be a breakout. And then where would I sell? Up there, 38 to 39. Okay, that's where I'm looking to sell. I'm greedy. AMD, time to go. Okay, time to go. All right, it's banging on the upper channel here. It's time to go. Okay, I'm out. I'm doing the litany of chip here. Marvell, which I liked. Um, I said it's time to go. If you want to sell between 75 and 80, do it. Okay, I always said if you come back down into the buy zone of 67 down to 64, yeah, giddy up, right? It has been a good trade for the past 6 months. If you buy in the gray zone and trim up there between here 73 and above, do it. All right, enough of that, right? Let's go pharma. FV. Okay. I sold cover call. I've been selling cover call for the past month. Between I started out selling 172.5 and then I moved to 175. Um, and yeah, it's uh, it's a no-brainer. Okay, yeah, why not? For 25 cents cover call, I take it. Okay, it works. Would I add more to FV if it? I had ordered in to buy FV at 165, but um, after this, okay, I did not buy on this right here. So after I saw this, I'm saying, well, why not? Why not add some more? But by the time I made up my mind to do so, it already run. Okay, so alrighty, let's move on. Uh-oh, what's going on here? I see a froze in Thinkorswim here. What's going on? Hello, why are you not working? Oh boy. All right, I want to give it a few seconds here to straighten itself out before I call the end of this stream, because maybe the update is kicking up again and there's nothing I can do if it froze up on me here. Ay, ay, ay. Come on. Huh. So obnoxious. Why? Okay. Well, people, not much I can do. I'm gonna chit chat a little bit more on things that I can talk about and see if this thing will kick back. But for now, I did look into JPM earning and Wells Fargo earning, as well as Citigroup earning this morning, while I wait for Thinkorswim to get updated. Um, because I would talk about banks after Pharma, but look like Pharma is down. Thinkorswim is down, and I can't do anything about that. But the one glaring stats that I see from both JPM, Citigroup, and Wells Fargo was charge off. Okay, if you don't know what, if you bother to go look at the report, there's a number, there is a line item that they talk about net charge off. Net charge off is basically bad debt that they said, forget it, we can't collect. Okay, that's basically, people not paying their credit card, declare bankruptcy, whatever. Both are up significantly year over year. At Wells Fargo, it's almost double. Yes, um, second quarter of 2023, it was something like 700 million. This quarter, 1.3 billion. Okay, so that tells you how bad the consumer is getting. JP Morgan, same thing. Not quite double, but the net charge off of this recent quarter was over $2 billion, and significant number over at Citigroup as well. It's insane. What is insane is if you go back and look at 2008, 2009, and 2010, the net charge off at all three of these companies are so much less. It is insane. For those that were around long enough to see and to experience the near catastrophe of the financial system in 2009, 2010, remember, the, the stock market bottomed in March of 2009, but the economy was in a shamble all the way through 2010 and didn't really bounce or recover until after 2010. So the height of the depth of pain for the consumer was more like in 2010, not 2009. Okay, let's see. Are we back? We're back. Okay. Whew. All right. Okay, so for FV, I didn't get a chance to buy, but the order is there to buy. Okay, if we drop into 163 down to 161 range to add more, I'm fine with that. Pfizer doing good. We leaped over the 200 as I predicted. Okay, when this happened back here, I'm like, nah, it's no chance it's holding. Okay, no chance, and I was right. But this time, we are over. It can ride 29 for a while. Okay, it's okay. We're in the first inning of this turnaround. Okay, so no, I don't sure. With pharma, with biotech, a lot can change on good news, right? If you have good drug result, then it can pop. But until you get those good news, okay, it's gonna be a slow. I wouldn't use the word melt up. It's just gonna be, take its time, no rush. Okay, I have not added to Pfizer in a while. No need to. What's the rush? On downdraft like this, I might sell like a naked put, like a 27 naked put, but that's it. JSK, oops. Oh, somebody in the chat group popped in. Travel in my 50s. Thanks for the show. Whoever you are, I'm not sure if you're the subscriber or not, but if you are, welcome to the show. And as always, if you have any specific stock for anyone, if you pop into the live chat and you have a specific stock you want me to comment on, type it in there. It's very rare that anyone ever popped into one of my live stream. JSK, which I liked. I bought some. Would I trim here? No, I'm greedy. Up there, okay? Would I add more on pullback? Yes. I would love to add more below 38, okay? But I like JSK. What other big pharma are we talking about here? Of course, Eli Lilly. We don't need to talk about those things, okay? J&J coming off the bottom here, okay, which I like, okay. Would I trim into the 100? Not really. Okay. Would I trim 200? Maybe. Okay. Up there for sure. Okay. 155? Please do. Okay. Please do. Um, Speaking of biotech, Viking. Okay. Viking. Looking good. Hey, congrats to those that are willing to buy down here. Okay. It was not easy. It was not easy to be buying 52 and below. Okay, no doubt it was not easy, but I did. Many people did. If you did, you in the green. Sell cover calls. Would I trim into 60, 62 and above? Yeah. Yes. 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 Okay, so I'm greedy, but I would gladly trim 62 and above. Uh, I had some cover call, but I would outright trim share at 62 and above, and buy back later. Okay, we're in a long game here. The, there's portion of the holding that I don't mind holding for the big gain into this crazy range here. But for now, stay disciplined, trade, sell cover calls. I have cover call at 65. I will gladly let them take away shares at 65 for now. Okay, if not, rinse and repeat. I've been doing that the last 2 weeks. I sold two last week and I sold one this week, and I will look to sell on pop. On pop, I might sell 62 or 63 cover calls. Keep doing it. Rinse and repeat. Let's move on to talk about banks, okay? Because, yeah, back to what I said about banks before, okay? If you go back and look at 2009, 2010 annual report of JP Morgan, the net charge off was so low. Okay, this give you a comparison that is as unreal, as bad as the economy, the consumers were in 2009, 2010. The net charge off was a lot lower than what we have right now, because of course the money, the expansion of credit that this country went through since 2008 is massive. The last 15 years has add on triple, quadruple the amount of money supplies, right? Yes, the pandemic, the money supply had grew 3-4 times. It's insane. It's insanity. So has debt, credit. I mean, to see as bad as the economic situation was in 2009, 2010, you're talking loan loss provision in the hundreds of millions. The net charge off at JP Morgan was in the hundreds of millions. Last quarter, 2 billion. Not a big deal. Jamie Dimon, oh, we fine. Not a big deal. It's still a small percentage of the portfolio. Nothing to worry here. It's only 2 billion. Same thing with Wells Fargo. Oh, only 1.3 billion. Still a small percentage overall, which is true. If you're looking at percentage, it is true, because their loan portfolio, their book are 3, 4, 5 times bigger. So yes, I get it. Banks, CEO of banks, it's all a number game. Okay, they fully expect to have people that go bankrupt. They fully expect people that can't pay their debt, but it's a number game. If they loan out the money, and if 2 or 3 or 5% fail, not a big deal. Especially when what? Think about this. At the worst of 2009, 2010, I believe the net charge off was in the 9 or 10% range. Okay, something crazy. something high. Right now it's low. Right now it's like 2 or 3% or something insanely low. Okay, I could be completely way off my number, but if you are collecting 20 to 25% interest rate on your book, that's how much JP Morgan is collecting on credit, okay, on credit card debt. They're collecting 20 to 25% or more. It's insane. I don't want to look at how high the credit card rate is right now. But if 2 or 3% go bankrupt, yeah, it's okay. But it just gives you an idea of how consumer debt has ballooned in the past 14, 15 years since the last crisis. Okay, insanity. I look back at the numbers from 2009 and 2010, and I couldn't believe what I saw. I'm like, what? Hundreds of million at the height of the disaster of the great financial crisis? And now we have 2 billion write off last quarter. Not a big deal. Oh, Jamie. Okay, JP Morgan, nothing to see here. Would I buy, sell spread at 195? Yes. But until then, nothing to see here. Wells Fargo, I bought 56.5. Basically, that's my average. My average is right where it is right now on the future. I thought to buy at 57-ish, and then 56.5 and all the way down to 56-ish. I don't think I bought anything below 56 in my recollection, but it's fine. Okay, it's fine. It come down to basically ref low. Okay. Yeah. What I sell, I did sell a put spread for next week at 54 and below. Okay, so it was like a 54, 51 put spread. Yeah, and I would let that one assign if it happened. Okay, because I wouldn't mind owning 100 share of Wells Fargo at 54 or less. Okay, so let it be. Now, if you see what happened, Citigroup came down, not as much bounce. Okay, if you see what happened to Citigroup, JP Morgan's, and Wells Fargo, okay, if you see that, why are you holding on to Bank of America? You think Bank of America is going to be so special that it's not going to experience that kind of a sell-off? Okay, this is the kind of thing that I don't understand traders or investors like, oh, I'm not selling. Okay. Would I don't have any. I'm out. Okay, I'm out. I've been out. So I don't know what you want to do there as far as holding it. I would not recommend anyone holding Bank of America right now into earning. Okay, I could be wrong, but too risky. Goldman Sachs. I don't have any, and I would not be holding into earning. Okay, it's it's a trim. It's GTFO. Okay, I got a great run. Okay, until earning come out, I'm not holding this thing. Not buying, not holding. Now Morgan Stanley, I'm out. Okay, when Morgan Stanley came down to this area here, that was a gift to buy, and now it's time to go. 104 was my exit. Was it exactly 104? It might have been, but yeah, I'm out. Out. Okay, out. Visa, I like. I like. Okay, Visa, I like. I bought some. I'm glad I was able to grab some at 261 ish. Surely, I wish it was. I believe I have ordered in all the way down to 255, but I was able to grab a few share. I think the average cost was around 260 ish. Yeah. Would I sell those share at 271? 8 for sure. 275, okay, 275 to 76. Yeah, but yeah, I like Visa. On pullback, I would add more. Okay, on pullback on the financial, I will add for sure 261 down below. Okay, I believe I have order all the way down to 251. To be honest, way down there. So yeah, come on down to 261, and I will add more. KRE, not surprised with the pop on TLT, right? Yeah. Now, if you have it, the gap fill, it's time to go. Okay, it's time to go. The problem I have, sure, I like that the KRE bounce here, right? I talk about selling put spread down here, which I did not do. I should have. I think I had order in. It's just that I was too greedy for the credit, and that never triggered. But that was a good time to buy down here. The problem with the KRE, the regional finance banks, is that bankruptcy. Okay, it's I rather own TLT, outright buy TLT instead of KRE, because regional banks might not be in trouble as far as their book getting blown up with treasury bonds doing so badly up until now. But here's a big but: they have exposure to a lot of debt, bad debt, commercial real estate debt, even not commercial. Okay, and yeah, it's all kind of debt that I don't want any exposure to. Okay, I believe we're going to see more bank failure, especially regional banks. So no need to be in KRE here. If you have it, get out, take your profit and run. All right, let's talk energy before I go. Okay, USO. I'm glad it cooled off a little bit, but I want to see it below 80. Okay, I want to see it down here. I'd be much more comfortable with the economy, with inflation, if I see even upper 70s down here. Okay, down here, not up here, not 80, down here. Okay, I'm much more comfortable with the economy down here in the mid 70s. Okay, now if the economy get worse, then yeah, it's lower we go. Okay, there's no such thing as high oil in a recession. Okay, no such thing. So be careful there. As far as energy company, would I buy it here? Nah, no, not right here. CVX, would I buy it here? No, not right here. Now, would I buy CHK, which I like? It's in the money. Would I buy more CHK on a pullback to the low 80? Yeah, I like CHK. Okay, much more than LNG. Wow. Okay, I said it was time to go up here, but they keep climbing higher. Okay, so yeah, if you have it still, congratulations, time to go. Okay, now CTRA is coming off what I like, right? I've been buying down here, and on pullback, I would buy CTRA. Okay, below 27, mid 26, yeah, mid 26 all day. I had order in between 26.5 and 26. Okay, that's where I have order in to add more to CTRA. Okay, so um, I like a lot. Okay, I think that's it. Thank you for sticking around. Have a good week.